Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah. All through this week, we'll try and talk to companies which have announced a high degree of capex over the course of the next 12 to 24 to 36 months. The idea is to try and understand what some of these mid-sized companies believe is the demand trajectory which enables them to take such a high capex decision, and how does it alter the landscape and the shape and size of the company post these capex plans come on stream. The company that we're talking today is CCL Products, and it's slightly different than some of the others in that they also have had some bit of the recent capex come on stream, and therefore it probably doesn't mean that the company will not have revenue growth until the new capex comes on stream, because they'll also benefit from the existing capex that has already come. So let me pose all of these questions to Srishant Challa. He joins in, needs no introduction really. Srishant, great having you. Thanks so much for joining in. I hope all is well.
Yeah, thank you, Neeraj. Yes, all good from our side.
Great. So Srishant, I was reading a brokerage note which talked about how you adding about 85% of your existing capacity in terms of new capex, but also how in the last 12 months or 18 months, there's a bunch of capex that has come on stream. It's given you this confidence in these volatile/fragile times to incur such large capex plans?
So I think the first point that I need to mention is since we are in the instant coffee business, this is one of the very few products that has stood the test of time. We have seen instant coffee go through recessions. We've seen it go through pandemic. We've seen it go through war situation. And one consistent thing that is there is the coffee consumption has not reduced as such across the world. So wherever people are, this is an essential commodity for most people. And the consumption has been consistently growing. What we have been doing over the last couple of years is we've been developing relationships with our customers. We are seeding new markets. And with all these things, we've laid the foundation that gives us the confidence to go in further expansion. Last year, our objective was we need to double our capacity from where we were. So we started with a 3,500 ton capacity enhancement in Vietnam. The next phase is going to get completed by this year end. We'll have another 16,500 tons, which we are adding over here. By next calendar year end, we are looking at adding another 16,000 tons in India itself. So overall, we'll have a combined capacity of around 71,000 tons by the end of next financial year and calendar year.
Okay, and just please correct me if I'm wrong, but this added dried coffee capacity, if I'm not wrong, the large capex, which is also I think a mix of brownfield and greenfield, that is in addition to the things that you've just mentioned to me thus far.
The spray dried capacity is what we are expanding on at this point in time, and in Vietnam it is a brownfield expansion. In India, it's going to be a greenfield expansion.
Okay, so this large 85% capacity addition that you're doing, you're saying comes on stream completely by the end of FY24.
Yes.
Both Vietnam and India put together.
Yeah, Vietnam will come online in the next couple of months.
Okay.
But with India, it will come online by next financial year.
And are you on record saying that you expect that, let's say FY25, therefore, you will see about 50% of the capacity utilization rates in FY25 itself?
Definitely.
Okay, great. So, how are you funding this? Because if Vietnam is brownfield, I presume that the capex requirement would be low. So what is the total capex requirement and how are you funding it?
So in Vietnam, we are looking at a $30 million investment for this brownfield expansion, actually about $27 million to be precise. We're also laying the foundation for a future expansion. So we are also considering making some changes to our infrastructure now itself. So yeah, approximately around $30 million in Vietnam is what we're looking at. And in India, for doing the complete greenfield project, we're looking at about a $40 million investment. In Vietnam, we are again looking at internal accruals plus long-term debt. I think about 4 years or 5-year debt we are taking. And India also will be something similar.
Okay. I'm presuming that this doesn't make your debt equity situation any materially adverse. And when you're saying you're looking at taking it from 4 to 5 years, I presume that your thought process might be that internal accruals plus cash flows help you in repaying some of that debt over a period of 5 years as well.
Yes, exactly. So one good thing is our existing business, it is consistent, it's growing. So we have cash flows coming in on a regular basis. So our dividend policy also is going to remain the same. We have a 30% dividend policy. So last couple of years, our track record is exactly the same. So we are just ensuring that we are making our investments and reinvestments in the right manner so that there will be consistent growth going forward as well.
Very interesting. And then the debt equity, once you take all of this debt, what does it go? I mean, I'm presume you have negligible debt equity, if I'm not wrong. So
yes.
What does it do?
So actually, at this point in time, in India, we just have a very, very small amount of debt for a packing facility that we have set up. By next year, we'll be debt-free over there as well. Vietnam, we've been debt-free for the last several years. We've been generating positive cash flows and repatriating dividend to India as well. So with this investment, there will be a very small amount of debt that comes onto our books.
Got it. So Srishant, please tell me, here's my question therefore. You have upped the guidance for FY23, and please correct me wherever I'm wrong, but you've upped the guidance for FY23 to 20 to 25%. You have the Vietnam capacity coming on stream, maybe the last quarter of this year itself, but certainly for the full of the next year. And you have the added India capacity coming on stream for FY25 as well. Therefore, it's evident that when you up the guidance that you are optimistic about growth for FY23, are you as optimistic or even more optimistic of growth for FY24 and 25?
So as of now, for the next 1.5 years, we are actually 100% committed to our existing capacities. So we are already pre-sold for the next 1 year is 100%. For the next 6 months beyond that is around almost 90% commitment is already there. So that is the kind of visibility that we have for our kind of business, because most of the customers that we work with are big brands. They have very good visibility and they don't change suppliers very easily as well. So we know that these companies, they're also expanding in various territories, and they've taken us into confidence, asking us to be their preferred partner in those expansions as well. So that is the kind of visibility that we have, which has given us that confidence to go in for this expansion. Beyond in fact, there, I think around 15 to 20% of our capacity for FY25 also has been pre-sold as of date.
The existing capacity.
Existing capacity. So that is something that is giving us that kind of confidence to keep expanding. Apart from that, within India itself, our brand has been growing at the rate of almost 45-50% year on year. It's stabilized, it's consistent, and in addition to that, we are currently present only in South India and 4 states mainly. The rest of the country, it's very limited presence that we have. So once we start expanding across the country, automatically the demand also will increase within India, is what we are confident about.
No, that shows, but I'm still trying to therefore understand in numbers terms, if you're looking at 20-25%, right, circa that number, right, for FY23, and these capacities coming on stream, which add to the potential, are you therefore as confident about FY24 and 25? You may not, these numbers may vary depending on what happens around the world, but as things stand, would you be as confident?
Yes, as things stand, we are confident. We're talking about almost a 20% growth year on year. That is what we are confident about. So the guidance that we had given the market also was that we would be doubling our top line and bottom line within 4 years. That's assuming a CAGR of about 18% approximately. So that is something which we're definitely confident about. This year, we are doing a little bit more volume for multiple other reasons. And this year, we have much more visibility, which is why we've increased our guidance. Original guidance given was 15 to 20%. We've changed that to around about 25% because as the year started, we've seen that there was a better offtake and all. So that's why we had to increase the guidance upward.
Okay. Does the currency move aid to the operational metrics and the bottom line numbers on the same or similar top line?
So for us, currency actually doesn't have much of an impact for us because we buy in US dollar terms and we sell in US dollar terms. So we have a natural hedge. Coffee across the world is sold and bought in dollars.
Great.
So that gives us an advantage.
Thanks for that insight too. My final question, Srishant, I'm just taking a leaf from your previous answer that and building a hypothesis that you have that Vietnam capacity contributing to growth in FY24, arguably some bit in FY25. You have the Indian capacity contributing to growth in FY25 and presumably FY26 as well, because in FY25 will only be 50% capacity utilization. And then you're laying a stone for Vietnam, which I presume you will start work on sometime in the next 3 years and commission it in some fashion, wherein it contributes to growth in FY27. You are earmarking strong growth capabilities for the next 5 years at least, seemingly, or maybe longer.
Yes, we are.
Okay, I'm not wrong in the math.
Yeah, you're right. You understood it correctly.
Thank you. No, I was just wanted to ensure that no incorrect information goes out. Okay, great. This is good stuff. And we wish you all the best to accomplish all of this and more. Thank you so much and good luck.
Thank you.
The pleasure was ours having you, and viewers, thanks for tuning into this edition of The Talking Point.